Hey traders, welcome to our weekly Raghee report. I'm Raghee. This is my report. We're going to talk about what's coming up this week in the market. Of course, take your questions, take a look at the economic calendar, and take a look at the open as we get the very freshest data as we have the Asian session opening. Very low volume, but nonetheless, it's the first look at the new week that we get on a Sunday evening. Thanks as always for hanging out, putting in the extra effort, preparing for the week ahead. All right, so a couple things to think about as we prepare for the week. I'm going to jump into the economic calendar. Frankly, there's really nothing else to talk about other than, well, most of you know it. We have FOMC on Wednesday, September 21, economic projection statement, the rate, which is expected to be a 3/4 of a point bump. Now, I know we're still well ahead of the release, but right now, still, the overall expectations are 82+% that there will be a 75 basis point hike. That's a 3/4 of a point hike, and only 18% right now. Now, why do I say right now? Why am I emphasizing right now? Because as we get closer and closer to 2 p.m. Wednesday, these two columns will shift. And while we will not hear from any FOMC members between now and 2 p.m., 2:30 technically, when we have the presser on Wednesday, if there's data, if there's chatter, who knows, these columns can move. But as long as this column to the left, the 300 to 325 basis point column is the tallest, that's where the broadest expectation, the majority is. Anything above 80% can really be called quote unquote fully discounted. And that's where we sit. So everything that's happening in the market right now is predicated on this understanding that the Federal Reserve is going to hike 3/4 of a point. If we get 3/4 of a point, no surprise. If we get a full point, surprise. What would the markets do? Oh, we'd probably crush the Friday lows easily, swiftly, mercilessly crush those Friday lows. This is the way that we'll measure what happens next. More near term, let me give you one level to keep an eye on as we are going into the early part of the week. One level to keep an eye on the S&P futures. This would map to the SPY. This would map to the SPX. This would map to micro. The S&P minis had a high on Friday at 3905, so just above the 3900 major psychological level. Any kind of movement through 3905 after 9:30 Eastern tomorrow, especially if we can hang on to any strength through that level into the Monday close, would be considered the completion of a minor low pattern and holding the Darvis level that is sitting at roughly 38.83. So these are things to keep an eye on. All right, gang. So let's get into the best part of what we do here each and every Sunday, and that is get into, well, your questions. All right. So let's dive in. Now, by the way, I don't know if this is the first time I'm actually attempting streaming on Instagram. So I don't know if any of you are tuned in on Insta or not. Not sure if you can see me on Instagram, but I'm going to start to broadcast Charts and Coffee as well as our weekly report on Insta as well. So we'll see if that's working. And also, for those of you that are looking at this maybe on a phone or a smaller tablet, the two charts in front of you are the 5-minute time frame on the left and the daily time frame on the right. Okay. All right, let's get into it. First question coming up is, good evening. Hey there, Rocky. How are you? Great to hear another presentation. Happy to do another one. Is there any way to play the yield curve using futures contracts? I mean, there are ways to sort of mimic what's going on. It depends on what you want to take advantage of. There are ways to play the 2, the 5, the 10, the 30. So I've never really attempted that, playing the curve itself. I imagine there's something. I've just never done it. So if I want to take advantage of the 2, the 5, the 10, the 30, usually I'm going to go with the futures contracts. There are some liquid ETF alternatives in the mix. But for the moment, I'd have to get back to you on that one because there are lots of different symbols to play lots of different things in the market. The question is always, Rocky, what I'm racking my brain to sort out is if there's a liquid alternative. And I don't recall that there is a liquid one. So, that's something I'll have to get back to you on. All right. If time allows, can we discuss currencies and the interest rate potential setups this week? That's it, right? So that's the interest rate potentials. Those are the probabilities based on the Fed fund futures. Now, what about the currencies? If we get the 3/4 point hike, I would widely anticipate, I'm going to change on over to the DX index dollars future contract. I would widely anticipate the resistance on the US dollar. That's the daily time frame, the larger chart. I would expect that to hold. What is that? Oh, you know what? Give me 1 second, gang. When the cat wants in the office, come on, buddy. Come on. I'm at a live show. Come on. What do you need? All right. No, yes, I absolutely prioritize the cat over everything. I think anyone in the chat room knows when he needs something. Okay. He probably wants his dinner. What time is it? Okay. So, as far as currencies go, dollar should hold the resistance that we have. I would not anticipate the dollar making a higher high through 110.78 if we get the 3/4 basis point hike. If we get the full 1 point hike, expect likely a test of that high from September 7. I would definitely expect strength. And then remember that the relationship between the dollar and the euro is an inverse one. So if the US dollar is heading higher, expect the euro, the 6E futures to head lower, and expect FXE, the euro ETF, to also head lower. That would be the way in which I would most definitely expect action in that corner of the market to behave. All right. That's absolutely what I would anticipate. So this is the FXE I'm showing you, and this is going to mimic what's happening on the 6E, and this moves opposite or inverse to what happens on the US dollar index. So that's the way the currencies would play out. Thanks for the questions. Hey there, PP family. Hey, evening. On the 2-hour, 4-hour, and 1-day time frame, we see a lot of bullish divergences on indicators. Okay. Now, so I think it's really important to make sure that I never start commenting on things that, well, frankly, not every trader uses every time frame or different trading strategies. So I do not use a 2-hour or a 4-hour time frame. So it really would be just sort of irresponsible for me to even make comment on what's going on there. But we could take a look at the S&P, and then I'm not really sure which symbols specifically. Remember, we don't want to have broad generalities, but since we're talking about a relief rally, we can take a look at the S&P. Daily time frame, I don't use divergences. Never have, never will. Not that there's anything wrong with it, but divergences are not my jam. By the way, for those of you that are wondering, what's a divergence? So divergence is, imagine price testing resistance while an indicator is testing support. There's a divergence, there's a difference, right? Resistance in price, support on the indicator, or vice versa. And so in that regard, I'm already going to say, I'm looking at the way in which stochastics and the way in which the V-score that I'm looking at is sitting at a -1 standard deviation. So I use more convergence than I use divergence. Do we expect a relief rally this week? I would expect a bounce. I don't need to give it a nickname as far as relief rally or a short squeeze or anything like that. Strength is strength, weakness is weakness, whatever we want to call it. That's really up to the individual. I never expect anything unless there's a setup. So to your point, is there a setup? Yes, absolutely, my friend. Just like I described, if we can complete the minor low pattern, then I would expect some movement at least halfway up the range or maybe to about 4,000. Okay. So I would expect that as long as the pattern completes. As far as after quad witching, there's been a rally. I love tendencies. So, which by the way, tendencies are not trades, meaning the tendency for me is not a setup. However, what I love is if I have the minor low and you're watching that tendency, those things are dovetailing. So if we have a bullish tendency at the same time as a bullish pattern that we're just waiting to see confirm, then that's what I would be looking at. So that's the way I would view that. And I really want to make sure everyone's clear. Again, just because I don't use it doesn't mean there's no merit. It just simply means that I think it's really important in this day and age of, frankly, online know-it-alls that I embody what I believe, which is nobody could possibly know everything there is to know about the market. We just know what we know. And the most honest thing we can share are the things that we're doing and the things that are working for us. So that's what I'll always share. And I hope that makes sense. So thank you for the question. Hey there, Tim. In my books, I like to trade breakouts and breakdowns. I did. Those books were written, gosh, 2007, maybe 2009 and 2012. So remember, it's been a minute. And back then, and those were Forex books, please remember. We saw consolidation and expansion a lot in the Forex markets in the early to mid 2000s. So yes, I did a lot of breakout trading and a lot of MACD based breakout trading. You know, one of the great things about having it accidentally documented everything that I've been doing for the past 23 to 25 years on the internet, somewhere with a Google search, it exists. So whether that be in the late 90s, early 2000s, articles that I wrote for trading markets, whether that be any of my 3 books or just anything that I've done, it's really cool for me to go back and look at things that I wrote 2 decades ago and see what I was doing and how nothing's changed per se, but there are nuances, right? And I love going back and looking at that stuff. So now I like to do pullbacks and trend following. I like trend following then too. So one thing that I probably, being more consciously competent now at 51 than I was at, say, 29. If you go back to my early career where my trading and my teaching, collided, what I probably did, not even super consciously, was I always traded in the direction of the trend. I'm a South Florida. I've lived in South Florida forever. Surfing is, something I like to do. I used to skip a lot of senioritis, high school senior year surfing. I love surfing as a sport and an analogy. We always want to surf the wave. Those of you that watch me trade in the room, we do something called surfing the wave, which is to say, I look at the moving averages on my screen, the 34 EMA on the high, the close, and the low, and I try to find a trend, and then I surf literally the wave. And that was something that I probably did not even knowingly, because consolidations in the wave, consolidations within a Darvis, where I have a bias, a directional bias to the long side because the trend was and is pretty much to the long side. I think that's still valid after all these years. So if you're a breakout trader, what I'll say is play the breakout in the direction of the dominant trend or the trend that was. So do I still look for momentum? Not as much, Tim. No, not as much as I probably would have in my 20s and 30s. In my 40s and 50s, I just turned 51 this year. I'm really much more longer term trend following. And when I say longer term, daily time frame. And even though I love to day trade, a lot of you who watch me day trade, and we day trade, 5 days a week in the Sector Secrets Mastery. A lot of you who join me there, the first thing we're looking for is a trend, an intraday trend. So even on the short-term timeframes, I'm still going to prioritize the trend. Thanks for the question, Tim. Thanks for the walk down memory lane. All right, next up. Hey there, Nick. I have 4 positions that are each 25% of my account, and each within an 8% stop loss, 2% of the account. Does that all sound reasonable or too big of a position sizing, too little wiggle room? So if you have 4 positions that are 25% of your account, you now have maxed out your spending, which, by the way, a lot of people would think, Rog, you spent all the money in the account. Presuming there are options and there's a known risk and a limit to the risk, as opposed to, say, futures, right? And even with the options, we could always gap, which would increase the risk. I would not recommend being at 100% spend of your capital. Although, frankly, I don't have a huge problem with it, but I'll usually prefer not to. That being said, I'm not as concerned about how much you're spending as opposed to the rest of what you described there, Nick, is how much you're spending, risking as opposed to what you're spending. So you're risking, you have an 8% stop, which is 2%. Yeah, I don't have a problem. My issue is anytime we are the bulk of our positions, this is the threshold, Nick. If the bulk of our positions in our account, if they were all stopped out, granted, we can't control this on gaps, but if they were all stopped out, worst case scenario, I want to be within a reasonable loss of less than 50%. You might think 50%. This is if everything just goes sideways. And normally every trade in my portfolio or every trade in my trading account is not going to get stopped out. Some will be fine, others will get stopped out. The idea is not to get demolished by all of them getting stopped out and risking ruin. So that's generally it. Yeah, on the surface, no, I don't have a problem with that. Now, there's a lot more nuance. Is there a concentration in a particular sector? Are those all fixed bets, things like that? But on the surface, yeah, I don't think I have a problem with that. All right, next up, Student of Truth. I am interested in your thoughts on the oil market. So let's take a look at the CL futures. CL futures are on a daily time frame in a downtrend. We are below the summer anchored point of control, which is to say, if we anchor our volume to, say, the beginning of May, we are below the most amount of trading size that has occurred on this chart, which was roughly around $88 a barrel. I'm looking at a continuous contract, by the way, of the CL futures. This is in a downtrend. And as far as being a day trader, I'm open to long or short as a day trader. I'd preferably like to trade in the direction of the trend, or at least of the morning bias, which is what we call the line in the sand. That said, I would longer term continue to be bearish in crude, which is to say also be very careful, gang, in oil stocks. Be very careful in oil stocks. All right, next up is, let's see. Hey there, Chief. I love and enjoy when I talk anything Fed. I do a lot of that, so I'm glad that we got a fan, at least one out there of that. My question is, would I say that the Fed is in a tough position trying to increase rates, but strengthen the dollar in doing so? I think they're always in a tough position. So we ask ourselves, what's their biggest problem? If we were to prioritize the problems that the Federal Reserve is dealing with, I would not say to them a strong dollar is problem number one. Strong inflation is, and a lack of wage inflation, I think, would even come before the strong dollar. In terms of them prioritizing the bigger monster under the bed, if you will, it's going to be, it's going to be inflation. They can't, we can't have it all. And the Federal Reserve knows they can't have it all. They can't have a weak dollar and hike rates. And any more than they can tackle inflation and want a weak dollar. You know what I'm saying? So I think it's just a matter of priority. But they're always in a tough position. They're always in a tough position. They're always going to be critiqued for raising rates. Remember, not but a year ago, they were critiqued and heavily criticized for keeping rates as low as they did for as long as they did. And now they're going to be critiqued for keeping the rates as low as for as long as they did, creating the inflation that we have. By the way, the inflation isn't the rates alone. In fact, I would argue inflation isn't the rates at all. It's the money supply. M2 money supply and CPI are far more correlated. There's far more causation to that than the rates alone. And they are bringing in the M2 money supply. In other words, they're reducing the printing. They're going to get criticized no matter what they do. But I will say this, most of it is pretty merited. And any bubble that we've ever had has been inflated by the helium of the Federal Reserve. So with that in mind, let's just trade what we have. And I'm not a Fed historian. I think there's some really cool books about the Federal Reserve. If you love Federal Reserve stuff, NBC Chief, I would highly recommend, and you've probably already read it, Fed Up by Daniel DiMartino. And of course, The Creature. That one's a good one. That one's a really good one. I'm trying to see where I have. Oh, there it is. Yep. I have Fed Up on my desk right next to The Creature. So I would say those two. Do I have anything else? Yeah, other than The Creature from Jekyll Island and Fed Up, those are probably two of my favorite Fed books. So if you're a Fed historian, you'll love it. You'll love it. All right. Enduro Mom asks, what's my gut feeling for Fed week? For Fed week on the S&P 500? Enduro Mom, I have absolutely killed any gut feeling. Luckily, my intestines don't have any fingers, so they can't make trades. But I know what you're saying. I don't have gut feelings about the market ever. I'm going to stick with Enduro Mom. Thank you for the question. I'm going to stick with that setup. The setup is what mutes the gut feeling, the thinking. I have to trade what I see, and what I see is a minor low pattern. What I see is a neutral market that is arguably oversold, and I need that pattern to confirm. And when I see that, now I have a trade. But I know what you mean. I really try to remove any of that gut stuff, right? And I think the more we do that, the better we're going to trade, because they're the things that we want. And then, of course, all the cognitive biases pile in, right? And it's not just one cognitive bias. Charlie Munger talks about it, the Lollapalooza effect, where all these small cognitive biases start stacking in on each other. And so the more that I can remove me from my opinion from the process, the better, and just stick with the price action. And that's what I see, that minor low, neutral market, oversold, slow stow. And then if you include things like that have been mentioned already in our show, things like the tendency after triple witching, third Friday of the month. I won't say all of them are bullish, but the witchings, the quarterly witching is usually pretty interesting. The activity after that, and then we're going right into a Fed meeting. Yeah, clearly a lot of fireworks there. All right, and then go Bears. Now, hey, Enduro Mom, I think some people could think go Chicago Bears or go Bears sellers in the market. Either way, I'm sure we've got fans for both. Thanks for the question. XLP. If we look at XLP, we've got Staples. Staples got hit hard over, like a lot of things did on CPI. SO, I'd say I like SO better. Structures more bullish. And I'm always going to prioritize uptrends. I'm always going to prioritize the uptrends. Yes. So I'd go with SO, if nothing else, for the structure, from the underlying market structure, where we are above, for the most part, where we're kind of at the 34 EMA wave. The trend has been moving higher. It's momentarily lost a little bit of the trend structure, but only a day or two at a time. So I'm not going to be too concerned that the daily chart of SO has gotten a little wobbly again in the trend, because the path of least resistance does seem to continue to be up. So I would prioritize SO. Debbie says the cat rules the room. Oh, absolutely. Absolutely. I'm not proud of it. It's just a fact. And anyone who has a cat, where is he? There he is. That's the guy in my chair. That's my husband's setup right there. Yeah, but that's the guy. He owns the joint. I work for him. And his squeaky toys. All right, next up, Bernie. I've got a lap dog trying to demand my attention at the moment, probably for a treat. Yep, I'm with you. Got one of those too. 60 pounds, not huge, but yeah, she still thinks she's a puppy. Hey there, Wes. For using Koifin. Yep. Have it on another one of my screens. Prioritizing swing trades for the daily. Are we looking for the flow of rotation to increase from 1 to 3 months? or from the 3-to-1. Wes, what I'm looking for, if I'm looking at CoiFin, and I don't know that I'm logged in on this browser, but we can fix that. Okay. If I'm interested in the rotation, what I'm going to do is, there we go. What I'm going to do is look for the strength to the stronger sectors to head lower while the weaker sectors head higher. We don't have rotation. We haven't seen rotation in a significant way in a very long time, which is to say rotation is certain sectors moving lower while those are going to be the strong relative outperforming ones, while the weaker underperforming sectors are moving higher. That's your Ferris wheel. That's your rotation. And that's the way that I look at it. If I don't see that sort of Ferris wheel happening on those squiggles, the secret squiggles, as I love to call them, if I don't see that Ferris wheel action, that rotation from the very top of strength heading lower, the very bottom, the weakness heading higher, I don't think we've seen that much at all. Yeah, in some time at all. All right, next up is, bear with me, gang. Lost my place in the questions. How we got time? All right. I use TradingView charts too. Hey there, Bernie. Do I know if TradingView has an ATM, Advanced Trade Management? No. So Bernie, I would not in any way say that TradingView at the moment is, and I don't know if they do. I don't use TradingView for order entry. I use TradingView for charts, for alerts, for my indicators. But as far as advanced trade management, I actually do not know because I don't execute orders. I don't put orders in through TradingView. And I would doubt they've got the sort of ability that NinjaTrader does, but I do not know. Maybe somebody else here at Simpler or in the chat does, but I don't execute orders through TradingView. So they might have some advanced order entry if you're playing equities or futures, but I don't know about options and things of that nature. Yeah. Okay. Thanks for the question. All right. Next up is looking at my weekly and daily time frame for the euro-dollar pair. Yep. It's been an interesting it's been a lot of interesting movement with the euro US dollar relationship, mainly because what we have is the European Central Bank hiking rates. So a very fresh rate hike that's going on in terms of that central bank just beginning their increases in the rates. And by the way, remember, as of this month or next, I believe they will be getting out of their negative deposit rates. The US is in a much more mature rate hiking cycle, and it's kind of towards the latter end of it. So it's going to be interesting to see how much longer the dollar is really capable of making higher highs, or the euro US is capable of making lower lows. So I'm not placing any major bets on that, quite frankly. I don't believe I think the strongest days for the US dollar, meaning higher highs and those parabolic moves we saw earlier this year, that kind of movement is in the rearview mirror. And I think that the dramatic movement lower, while they may continue to make lower lows, I don't expect dramatic lower lows in the euro any more than I expect dramatic higher highs in the dollar. Again, those more dramatic moves, those for both currencies are in the rearview. All right, Sachin, I heard something interesting. Fed started increasing rates in March, and it has not really worked. Why would they try the same and expect a different result and risk a recession in the process? Sachin, I'll tell you what, I will leave conversations like that to folks on television. It honestly, as a trader, it doesn't really help me to dive into those. Now, Sachin, if you and I were having dinner and we were conversing about monetary policy and market movement and the implications of all that, that'd be a fun conversation for sure to have with you. But as a trader, it doesn't matter what they should do or what, it doesn't matter. It only matters what they're going to do. It only matters what we're expecting. But to your point, I never, ever have really tried to succumb to that whole judging what the Fed is doing, because the truth of the matter is it doesn't matter what I think. I try to keep that in mind. It doesn't matter what I think. It only matters what they're going to do and whether or not I'm positioned to take advantage of it. So I hear you, my friend, 100%, but it has never made me money to answer that question. And that's what I look to do. The questions that I answer, the puzzles that we solve as traders and investors, smaller puzzles for traders, bigger puzzles as an investor, but the puzzles we solve, at the end of the puzzle, I'm expecting a reward, right? So if I'm going to solve a puzzle and there's no reward at the end of it, probably not too motivated to solve that puzzle. What are the lower indicators I have on TradingView? I have a slow stochastic. I have a label that allows me to see the read on the CCI, the Commodity Channel Index, the MACD histogram, and the slow stochastic. And then I have some indicators that measure on two symbols, the 8, 13, 21, and 34 exponential moving averages. Okay. All right, gang. Well, that's a wrap. That's a wrap. So the replay will be up shortly at the Simple Trading YouTube channel. If those of you that are tuning in on Instagram, I'll have to go see if that works, because we're going to start to stream on Insta, our Charts and Coffee, as well as our Sunday show. And then if you're on the Simpler Trading or my personal YouTube, Raghee Horner, that replay will be up as soon as I'm done. All right, gang. Be good to each other. I'll see you tomorrow morning, 9 a.m. for Charts and Coffee, Monday through Friday, 20-minute pregame show. I'll see you then. Be good to each other. Enjoy the rest of your weekend.